Holy F. There's a 92% chance this happens next, and it's really important. So please pay attention. In about a month, there's a 92.1% chance that Jerome Powell is going to cut interest rates. And what that basically means is that the stock market might go higher. But very simply put, he has a meeting on Friday coming up at Jackson Hole. And this is where he's going to tell everybody what he plans to do next. This is what happened during previous Fed meetings. And this is what happened with Jerome Powell and President Trump when it comes to tariffs back to 2018. So those interest rates are a little bit too high, buddy, right? They got to get down. What does that mean? I'm not sure I can do that. Well, I'm not sure you're going to be around much longer. Well, I'm not sure I really want to be here any longer. I got to think about this a little bit more. Why? I got the receipts here, and they say the interest rates are a little bit too high. What are you talking about, sir? Well, I got the receipts right here. They say the interest rates are a little bit too high. Let's have a look here. They say that they should be lower by about 150 basis points. That's from my guy over here. Let's have a look here. What? I'm a little bit surprised. Wasn't expecting this. Wait, there's a little sticky note here, and it's highlighted in yellow. Do not listen to him. This is a lie. He's like, wait. I read the receipt. These receipts are wrong, right? You can't expense that. That's not correct. You can take that back here. I'm not so sure he's going to like that. So as we continue the story here, we have to ask ourselves, is Jerome Powell really going to make the tough decision? And it's not really that tough. I'll walk you through this for today because, all right, that's it. It's over. What about the economic data? Whoa. So Jerome Powell's going to think, and then he's going to do something really simple. What's it going to be? The job's done. It's time to cut interest rates, right? Time to go what? Reverse stock market crash. That's right. Cool man's here. And he's going to get the job done. That's a story for today in roughly 2 minutes. As of right now, we're in fully bully boomtown, buy all dips, which means, the bulls are here. We still have a little bit of a warning in terms of our radar, but as of right now, higher lows are sufficient, and we buy the dip above 610. Here are your key technicals for this week. You can note that it's green everywhere. So until we get proven otherwise, that's right. Grab your chips because we get dips, and we like dips. This update happened on Friday. It wasn't really all that meaningful, but we'll just leave it there. It's not my point to say what did or did not happen. There was progress. I'm happy to see it. These are your key levels for the S&P 500 this week. And as I alluded to, there's two important things for Jerome Powell this week. First of all, on Wednesday, the 20th, we're going to have the FOMC meeting minutes come out. These are a little bit stale. They're from before. This is what really matters here. It's on the 22nd. Jerome Powell's going to be speaking. That's Jackson Hole. There's some earnings this week. Maybe Home Depot's going to matter. Maybe it won't. Maybe Target will. Maybe it won't. Maybe Walmart will. Maybe it won't. Stocks had a lot of reasons to go lower this week, so I think that they just want to go up. Other key events happening right now, we're going to include an Apple event. That's a Detroit facility opening. There's a critical mineral event happening on the 20th. There's a battery event on the 21st. There's a Japan meeting on the 22nd. This one's pretty notable. Oopsie daisy. Let's see, we're not a robot. There we go. Japan is going to open up and propose an African-Indian ocean logistics network for trade. Resources. When? This week, August 22nd, on a Wednesday. Whoa. That's right. Whoa. And then the next day, there's going to be a meeting between these two countries, South Korea and Japan. And this is notable because it is before they go to see Trump, right? Before. The trip comes just before Lee is scheduled to head to the U.S. for a summit with Trump on the 25th. This is very, very curious. Why? If you watch this channel, you should know. Going into the later part of the year, there's some really important things here going into September, notably Apple, TikTok, and other things as well here. There's just lots for us to go through. Anyways, pushing forward, in terms of the S&P 500, in terms of what the algo says or our system and what Justin says, fully bully boomtown. We still have a radar, which means that as of right now, we want to be a little bit cautious. But if you can watch all the way until the end of today's video, I'm actually going to walk you through exactly what I'm doing in both of my accounts. Pause right now if you need to. There's account number 1, right? That's my 401k account. And maybe a great time to subscribe to the channel or smash a thumbs up. And then here's my algo account so far this year, right? I'm up 18+%. Whoa. Here's my active holdings. And I'm not planning to do very much this week in this one. I'm being pretty patient. Right now, I'm pretty much all in cash. I got like 90% plus cash. In this account, I am now at 14% on the year, other ones at roughly 18. And I'll walk you through those updates a little bit later here. What I want to do first is to look over our shoulder for a second, because what this chart right here shows us is what happens at previous Fed meetings. So every time there's a box, it's a meeting. However, these asterisks become increasingly important, and that's because they're meetings associated with an SEP. Let me show you what that is in 1 second here. First, there is a little bit of a conflicting narrative here because Trump, again, had his meeting on Friday. That is a known. What we don't know about Powell is how is he going to react? Because let's read the headlines here. Going back to 2018, it's the same thing, right? Long way from neutral. USMCA assigned. Fed hikes anyway. Okay. Powell pivot. High or low. Hawkish cut. New tariffs on China. Delay on of iPhone tariffs. China doesn't retaliate. Deal assigned. Then we go down. 4 or 5 years later, it sounds like the same SHT in a different pile. Yes. Here's what matters for Jerome, because Jerome Powell we're a little bit less sure about. So we just want to make sure we understand what could go right, what could go wrong, and what could surprise us. Here's what they told us in terms of the dots. This is called their dot plot. It goes back to their meeting from June, which is the last time we have an asterisk here. So the last time they actually told us what they think the economy is doing, right? The economic data. Whoa. If we have a look here, this is what matters to me, and I think what matters to the Fed. Why? There's the biggest rate of change. You can see where we were in March versus where we were in June. So we're going to get an update on these. And you can see right here, I've pointed to what's important. 2.2 to 2.4. So 2.2 to 2.4 and 3.4 to 3.6. This right here is pretty notable. It's a Fed funds rate, or what Jerome Powell is supposed to do, or to lower those rates because the receipts say we got to cut those rates. So as of right now, there's one cut priced in for September. And then as we look forward here to October, there's now two. So if we're at 375 to 400, that means two cuts. If we look forward here, we can see that right now into December, the median is still right here at 375 to 400, which means two cuts. Here's where I guess really interesting, right? One does not just simply lower the interest rate, but if we need to, what do? Slow and steady, right? We got to bring it down slow and steady because Cool Man's here. And what we're going to find out at Jackson Hole is going to be very important, right? There's a huge stake this year, huge stakes. Pushing forward here, that's from Barron's. Bloomberg says that bond market rate cut bets enter decisive stretch with Powell. We just showed you those numbers. Whoa, a little bit too high here, right? Comments at Jackson Hole are going to be very, very important. And this is going back to a May 15th headline here where Jerome Powell signals that 2020 Fed framework language is on the chopping block. So it might get fired. What does that mean? This is what typically happens into Jerome Powell in an FOMC Jackson Hole meeting. Typical outcome, market goes up a little bit by 0.4%. Broader event window, S&P average gain is 0.9% over the next 2 weeks. Cool. Here's the dovish tone. Fed cut hints. We're likely going to hear that now. Stocks rally sharply, 1% higher. Russell's up by 2.5. That's what happened last week, isn't it? It is. Bonds rally, yields fall, gold up, dollar weakens. I'm going to show you some evidence on that right now. Hawkish surprise. Significant stock sell-off. Example, 2019, 2022. I don't think that's what's going to happen here. Baseline is small positive reaction, but if the rates are going to get chopped, well, we might go up. Clarification, right? There was sometimes, again, pause if you need to. There's some clarification, but broadly speaking, that's what happened. It doesn't mean everything's hunky-dory in the economy or where we're going to go from here. This is something I shared back over a year ago. What does it tell us? We're in a higher interest rate environment. Higher lows and higher highs. What does that mean? Man, we just probably set the first higher low. But this is, again, going back to September 7th, 2024. The market is hyper-focused on the first cut being 25 or 50. I think that's the wrong thing to look at. I'm more focused on news versus reaction to the news now. Again, big pause, big recession. Well, that's what everybody thought. It's not what happened, though. Here's what did happen. And again, that sufficiently restrictive number we heard from Scott Bessent, it's probably too high right now. Fed is being too data dependent. This is, again, back to roughly a year ago, September of last year. According to their own formula, they are too high by roughly 1%. They are still too restrictive. It's a simple formula. So Matt, he's like, yeah, I got to take these interest rates down. Come on, buddy, got to take them down. And America's paying too much in interest. Here's what I said. My takeaway was this. Market is too focused on the first cut being focused and the curve being down roughly 1% or too restrictive. Getting back to sufficiently restrictive as soon as possible should be the goal if they cut 3 times by December. This was last year. What is priced in? Then we go back to normal-ish. That's not what happened, though. Just like a prescription, the Fed needs to adjust the dosage based on the feedback. We haven't done all that. And the risk right now is that PPI is hot, which means they're worried about the future. because the stock market and the Fed are forward looking. So if you look back to 1995, they were flexible with their interest rate policy, right? Versus being overly too data dependent. What did they do? Up, down, all around, cut, raise, whatever, right? That's what they were doing here. What could go wrong for the bulls? AI is not as big of a theme as we thought about, or it's priced in. The economy weakens into 2025. That did not happen. What happened? Mega up. So Fred is just the Federal Reserve versus interest rates, versus PCE or inflation. You can see they're pretty data dependent on this one here, right? It goes up and down pretty synchronized. Over here, this is versus unemployment. These two are getting detached. So the Fed is less, these should be inversely correlated, by the way. Basically just means that they're more focused on inflation. This is what happened in terms of pause going back to 2000 as well. You can see that in 2000, we paused for 6 months. So we go up, we pause, we pause, we pause, we pause. What happens? 6 month pause, crash. If it's gray, it's a recession. The bigger the gray area, the bigger the recession. Pause for 12 months or twice as long, crash. That's the Great Recession. Look how gray that is there. So pausing for a long time is very bad. It creates a lot of restriction, right? That's what they say when they're saying they're being too restrictive. It's too tight. Yeah, well, we've already paused for 12 months. And if we look forward to the future, again, this is like from last year. They thought, oh my goodness, there's going to be a great recession here. We're going to go burr. We're going to go broke. Well, maybe the tariffs will work. Maybe they won't. I don't know. That's not my place to call it. Here's what I said back to 2024. And the S&P is not at 4,000 anymore. It's at 5,000, 6,000. And where? Going higher. So if we look here to SPX, which is the one I showed you at the very beginning, 6,450. That's a big number here. It is a big number. That was my template for last year. Here's my template for this year. I said, chips lead mega caps, tech lead SPY. Well, same thing this year. However, we're not going to fight the Fed. And as of right now, we're not. I showed you the same chart here going back to 3 months ago. It was at 4.2. I joked because Elon would have liked that. Now we're at 4.32, which means this is bad. So the market may be discounting PPI, but the US 10-year note is not. 4.3 is higher than 4.2, even though we have Fed cuts priced in. And remember, I showed you that the weakening dollar is also bad. This was a cup and handle, but now it's losing momentum. So yields are up, the dollar is down, and this basically means that what is US exceptionalism? It's that there is no alternative. Right? That's what the US is. There's no alternative. You just got to own US dollar, US bonds, US stocks, US everything. And I think that's still the case. I'm just wondering for how much longer. If we go back in time here too, again, at roughly 529 on the S&P 500, this was quite a while ago. I don't know the exact date, but what was it here? May 18th, 2024. That's a long time ago. That's like a year and a half ago. What happened? I said, we're going to go mega up. If it's the 1990s versus 2020s, 1, hit the 50 MA, 2, 3, 4. After we get to number 4, all-time highs, where do we go? An incredible 220% higher, which means if I'm correct about this, the SPY will go to 1,500. Again, it's just a theory. It's just a thesis. So far, it's playing out, but this means we're not going to go a little bit up. We're going to go mega, mega big up. And I think a lot of people are not ready for the train. So I could be right. I could be wrong. Here's where we are as of right now. It's tracking. Right, and this is, I forget when I posted that. Oh, sorry. This is March 2025. What did I say? Hey, rally on. Keep calm and rally on. Why? We already got our drops. So 5, 10, 20. We got our 20% drop now. So what is it? Man, if it's 1998, 1999, who am I to tell people not to party? Right? You drink whatever you want. You stay out as long as you want. I'm going to do what I want. What is that? Well, in March, I told you I liked NVIDIA. That was my idea. I said, I think we're going through the bell curve of adoption for each one of these in a wave: perception AI, generative AI, agentic AI, physical AI. And each of those is going to go through a bell curve of adoption. Do you use ChatGPT now? Because 700 million weekly active users do. If we take what NVIDIA said and extrapolate it out, Jensen has given us a roadmap to when? 2025, 6, 7, 8. Wait, hold on. It's 2025 now, so that would be 1, 2, maybe 3 more years. If it's going to be 1999 and we're going to be hung over, well, maybe it's going to be at the peak of one of these things. When? Maybe 98, maybe 99. When what? We have agentic AI coming out now. Code assistants, customer service, patient care. We don't really have fantastic physical AI yet. Autonomous vehicles are getting there. General robotics is trying, but we're not there. Maybe we need these fantastic chips. Why? Because That's what Jensen said. And right now, Jensen is in full control. So back in March, I bought NVIDIA at $112. That's what I did. I bought 1% of my account. I bought more. I exited the position now. I think there's better opportunities. Let's have a look here. Where is it? Oh, wow. Went a lot higher. Yeah, I said I liked it in March. Was it March or May? I forget. What was it? I was a little bit early. March 26th. Where was I? March 26th. March 26th. Where were we? March 26th. Oops, I was a little bit early. It went down a little bit first, right? So it went down. I think I bought more. And then it went straight up. Nike swoosh. Just do it. Just do it. Just buy stocks. Again, I'm not a financial advisor. I can't tell you what to do. This is what I've been doing. I'm trying to show you with evidence why you might want to trust me a bit more. Trust is earned. And hopefully I'm trusting some from you here because I'm trying to have a little bit of fun, but I'm trying to also show you how making money should be easier if you actually understand what's going on. Because right now, what's the trade? Well, what's the next trade? It's everything. The US has been lagging. This was back to March, again, the time that I'm pointing to, but the US caught up, right? It was catching up. Now it caught up, but the rest of the world is like in the double-digit all-time high year to date. S&P is now there, but like let's just quickly look. And I didn't do this ahead of time, so let me see if I'm full of lies or not. Let's see here. 12-month chart. DAX 22%. Wowzers. All right, let's look to EAM or emerging markets. 19%. I'm looking to the number right here. So this is the average emerging market. So S&P, hey, not bad. 10%, 9.6%. That's a 9.8%. That's a year's worth of returns. That's pretty good. Why? It's only August. Let's go to QQQ. Actually, let's do this instead. QQQ stock. This one might be a little bit easier because I know looking at candlesticks sometimes might be a little bit harder. Let's go to year to date. 13%, not bad. All right, let's go to SPY stock. All right, SPY stock. Let's go to year to date. 10%. All right. Now let's go to FXI, right? Ooh, the big bad China. How are they doing? Oh my goodness, 28%. Weren't they fired? It's up almost 3 times as much. Excuse me. Emerging markets. Let's look at those. That's the average emerging market. 20%. Excuse me. Let's look at EWC. That is Canada. Is that higher or lower than the S&P? Because apparently we got fired. 17%. That's right. We're doing 70% better than America. Thanks for firing us. We appreciate it. What about Mexico? EWW. 28%. Wow. All right. So the 2 countries hit the hardest by tariffs were Canada and Brazil. What's Brazil doing? What do you think? Think about it for a second. 50% tariffs. Did the people vote and say, ooh, we agree with Trump, Brazil is fired? Nope. 24% year to date. So what this basically means is that if all you're doing is looking at America caught up, it should catch up more. The other countries are up 10, 20, 30%. It's incredible. So here's what I'm doing. Again, we are cautious. We're cautious for insurance. The earliest we're going to get feedback is going to be Friday. If you're not sure what that means, again, pause if you need to here. Why? I show you everything I'm doing. You can pause right now if you want to, actually. Here you go. Here's all the notes for this week. I trimmed more in after hours on Friday. You got it? Cool. What am I doing? I'm raising cash, a lot of it. Right now, if you look here to BIL, it's 45% of my portfolio, half of my account's in cash. Why? Pause. The note should be right there. All right. And then going to this account, I am protecting my account. I'm trying to protect that higher low. So I formed higher lows and higher highs. I'm flattening out here because honestly, the trades are just not very optimal. I would like to actually get a dip. And what that would actually mean is that we're going to get a little bit of bearish price action on the charts, but ultimately we can actually form a potential back test. When we get V recoveries like this, it doesn't give a good chance for risk management. You can chase it, you can make some money, but in terms of proper risk management, it's just been hard. And that's okay. Why? It's the summer. We should be out enjoying ourselves, not glued to the screens. Trading's easy. What I'm trying to do is make a couple jokes so you can realize that if trading's not been easy for you, there's a reason why it's probably not. You're probably way overthinking it. The average viewer on this channel is 90% male. Men tend to not admit when they're wrong. They tend to rather want to proceed and be wrong than ask for directions. But you're watching this video, so what I'm going to tell you is that it's okay to be wrong. It's just not okay to stay wrong. And right now, blue skies are bullish. If you think America's still number 1, which most of my audience is American, well, then maybe you want to think America's going to do better than the rest of the world. What? 20%, 30% year to date, which is what? Take 640 times it by 1.1. We're in 700 now. 700? Yes, to the 261. Then we can go to the 361. Then we go to the 423. Then we just go higher. That's what Palantir did. So is a stock market as good as Palantir? Well, then we should go to 1500. I know that sounds like it's crazy high, but Jensen said 2028. It's only 2025, and people are still bearish. There's lots of cash on the sidelines. All right, thank you for watching all the way until now. So at roughly 20 minutes, I've tried to deliver as much possible value as I can, and that's because I'm going to be away for most of this week. I'm moving next weekend, and for me personally, as I noted in my updates this weekend, I need to be ready to actually move. So here's what I want to do. I said right here, a few small moves, otherwise patience, right? I'm going to be moving next weekend, so my prep is now done a little bit earlier. I'm also going to be quite passive into the end of the month. But here's what I want to leave you with. I don't want to brag about my returns. What I want to do is show you that I have struggled hard, right? I've struggled a lot to get to where I am. Started trading when I was 18. I am now 37. Sorry, trading when I was 17. So 20 years later, wow, it's been a long journey. So if you want to come join me and trade with me, you can click on the link in the description to join my waitlist, because I am going to have an update out in roughly the next month. That's right. And if you're interested, again, just click on the link, or you can go to my website. Again, myname.com, justincaron.com. Otherwise, thank you so much for tuning in, and I'll see you on the next video.